Hey guys, so I wanted to shoot this video to kind of go into a little more detail about what I mean when I say long-term creative wealth building strategies. So right off the bat, the majority of millionaires in the US attain their wealth in two ways. It's through long-term retirement savings and also through their home, the home value. Now, I definitely recommend having retirement savings as part of your long-term planning. It provides tax shelters for that money to grow, and when you retire even, there are types of retirement accounts that can help you not have as big of a tax liability end of life. Um, Also, when it comes to long-term wealth building strategies, I usually recommend having real estate in your portfolio. Um, Most of my wealth is in real estate specifically, and real estate provides a huge advantage over traditional investing. You can buy real estate at a discount. You can use real estate to grow wealth in a tax sheltered way and use it to help your tax liability from year to year. Um, and really, when it comes to real estate, besides just the traditional, like a single family home, there's also a lot of commercial real estate options like self storage units, coin laundry, and then just owning like office spaces that you either office spaces or retail space that you lease to businesses. So real estate is a huge area when it comes to investing. So I'm just going to leave it at real estate for now. What now? This is some really awesome information, and I love sharing this because a lot of people are not aware that you can invest in real estate using your retirement savings. Now, I'm going to shoot another video that goes a lot more into detail about how this is possible, but basically there's something called self-directed, and you can remove your retirement savings from a traditional broker where they invest in the stock market and stocks and bonds and whatnot, mutual funds, index funds. You can go to a different type of broker that will allow you to put that money into real estate. Now, there are a lot of rules when it comes to it, and I will, again, shoot a video that will explain a lot more in detail what this means. But think about this. You can use your retirement savings to buy long-term rental real estate that will forever have the retirement tax shelter. So if you buy and sell, you don't have the same tax liability. And if you do it within your Roth account where that money is all tax-free and you buy real estate within your Roth, that rental income is also tax-free. So really exciting stuff, and that may open up a lot more ideas to you when it comes to your long-term wealth building strategies. Okay, another thing that I like to talk about is accredited investors. An accredited investor is a person who is allowed to trade and invest in certain financial securities. And it's as long as you meet certain criteria. Now, why is it an advantage to be an accredited investor? Well, the appeal comes into the fact that it opens new opportunities to invest in asset classes such as hedge funds and venture capitalist opportunities. So, a venture capitalist opportunity, maybe you've heard of crowdfunding before, or here's an example like Uber. Imagine if you had the opportunity to invest in Uber when it first started. A lot of those types of investments require you to have an accredited investor designation. So I'm going to go into a lot more detail about what it is, how to get it, what sort of investments this opens you up to, and honestly, it's a lot of ways to get a good rate of return and protect your downside. So here's an example. Accredited investors can invest in something called hedge funds, and a type of investment that hedge funds do is real estate development. So let's say I do not want to get real estate in my portfolio from the standpoint of I don't want to go out and look at houses, buy houses, rent out houses, and then have to deal with tenants and all that comes with it. Well, a hedge fund works in a way that I can invest a certain amount of money. They will go out and build or procure an apartment complex. And then you get a rate of return based on how the whole complex operates. An advantage to that is that unlike the stock market, if the complex or whatever system went out of business, you still have collateral of the apartment or whatever. For how much ever money that you have as percent owner, you still have the collateral of the physical place. So if you invest in an apartment complex of 100 apartments and you are a 2% owner, then maybe 2 of those apartments are yours, right? And then you figure out from there, at least you didn't lose everything. Like let's say you invest in a company and then the company goes under, you lost all your money. At least this way you can have higher than normal or higher than average market returns and you still can protect your downside. So there'll be tons of more information on that and other types of investments of that nature in the group to come. The last thing I wanted to discuss, just brainstorming ideas, hard money lending. You can take your retirement funds, self-direct those retirement funds, and then work with people who flip properties. A lot of times, let's say a property flipper gets a good deal, they won't want to tie up their available cash to make the deal happen and to pay for the repairs. So as a hard money lender, you come in and you pretty much fund the project. You have a set rate of return with the person who you negotiated the deal with. So for example, like 10%, 12%. And you are guaranteed that rate of return as long as, well, how about this? If they pay back, you get that rate of return. If they do not pay you back, you can foreclose on their property. Now, this is a creative way to expand your real estate portfolio without using debt, without using loans, and without tying up your cash in a deal. So a property flipper finds a deal and wants to flip it. You come in and you provide the funds for it. There's a lot of details when it comes to this. For example, you want to be first lien holder on that property so that you get the property and can foreclose on it. Just like a little side tip. But if you had to go through the process of foreclosing on this property, you got this property at a discount because when you are a hard money lender, usually you stick to a loan to value ratio of 70%. So the flipper will be putting at least 30% of the money down. So if you have to foreclose on this property, you already got it at a 30% discount. Now, if you're not someone who likes the idea of long-term hold rentals, maybe you take over the deal, flip it, boom, you get your money back, and it may even be a higher rate of return than you would have gotten otherwise. But if you work with someone who's really good, they pay you back, you can get a high rate of return on that money. So before I just lose you guys with tons of awesome ideas and strategies, I just wanted to show you there's a lot of really cool stuff that you may not know about. And I am super excited to share this information with you guys and create a dialogue as far as what creative ways have I inspired you to restructure your financial plans. So comment on this video, like it, share it, invite people to this group. There's going to be tons of valuable information. I promise you're going to get a lot of information from here. All right? Take care.